In this video, the question is, are you prepared for what comes next? Are we heading for a soft landing or a hard landing or no landing at all? Will the Fed tank the economy to bring inflation down to its targeted rate? Are we seeing cracks re-emerge in the regional banking sector? And how are the biggest names reacting via their share price? I'll be covering the key news that you need to know about, as well as the charts that will give you an incredible insight into the market and where it's going from here. But first, I need to get you synchronized in with the main markets, so let's have a look at how things have been moving. Your synchronization is your profitability. Throughout the video, I'll give you strategies to deal with what's coming next. You'll find it incredibly valuable information. Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets, to assist you to become more of a financial and emotional blessing to yourself and those you love. If you like the content, please subscribe to the channel and don't forget to smash that like button. All the indicators that I use on the daily video come from the service inside ctksmethod.org. Let's run the numbers. In latest news today, the Fed signals cuts are possible but not imminent as it holds rates steady. The market, by some magical means, was expecting a rate cut, but we knew that there was very low probability of a rate cut because we track the data every day. There's about 49 days to the next FOMC meeting, and what we see in terms of probabilities, there is a 35.5% of a 25 basis point cut coming up. But that's not 100%, it's still quite low. The markets were expecting forward rate cuts, but that's not what they got. And what we see right now is the DXY strengthening. The US 2 and 10-year yield have come down very substantially, but the US 10-year is starting to find firmer footing. We can see that the US 2-year yield could very well reverse its course of action on this news. How have global markets reacted? You can see really clearly. And Masterclass students, you get this live chart in LV19. The Nasdaq has retraced. Also, Taiwan's indice, the Dow, German DAX, the Russell 2000, and a wide variety of other country exchanges that are yet to open will experience negative price momentum. But how problematic are things? Chief economist of the ADP said the economy looks like it's headed towards a soft landing in the US and globally. In January 2024, 107,000 jobs were added in private employment. We can see nationally the job growth is increasing. Job growth has mainly been absorbed through mid-size and small-size establishments. But there is some growth in 500-plus employees. We can see broad-based employment gains across various sectors of the economy, except for information, which has been hit relatively hard, but all the rest look quite good. Therefore, the question is a recession coming? To understand these questions, we must look and run the numbers. The annual change in US GDP is expected to increase over time into 2026. On a quarterly basis, we see some little dip here in Q2, but Q3 and Q4 are supposed to be bumpers. When we look at the summary of economic projections from the FOMC meeting on December the 13th, 2023, we can see the change in real GDP as forecasted by the Fed is still growing. But they expect the unemployment rate to grow as well, in reducing the PCE inflation numbers. How have the markets reacted? People are getting a little bit more bearish inside the markets. Of course, that always occurs as the price comes down. And when looking at the futures of the S&P 500, the Nasdaq, the Russell 2000 and the Dow, and that blue line is Bitcoin's price action, we can see especially the Russell 2000 did sell down, and the Dow has come down the S&P 500 and the Nasdaq. This is on a daily basis. We saw in the main markets a bit of a flight to safety as the VIX came up and the Nasdaq came down. We saw that the DXY recovered. Also, gold has been putting in a fairly good performance, but it didn't like the fact that real rates could increase, so it got crushed. We can see bond prices and bond yields continue to normalize. And oil has been hit. Other big news in the main markets: New York Community Bancorp stock plunged 38%, reigniting fears for regional banks. When we look at the regional banking index compared to New York Community Bancorp, we can see that's a really big reduction, and that was mainly due to very poor financial performance. What's really interesting, when we look at the S&P Regional Banking ETF, it's a very small reduction in price, and don't forget, price is always moving in a wave. When there was regional banking crisis just breaking out, what did Bitcoin do? It went parabolic. This is something to be aware of. It's very possible that if the regional banks start to collapse again, Bitcoin and crypto could see a massive influx. And when we look at price action like this, we can see that New York Community Bancorp has done it before, and it will probably do it again. But when it did it before, it recovered substantially. You can imagine buying down here at $6 and then basically selling out over $12. Not a bad effort. But we will need to keep our eye on the regional banking sector. In other news, Microsoft overtook Apple, but let's have a look at actually why that occurred. It occurred because of very substantial weakness. This, of course, is a daily basis, and we can see Apple has been selling down. Microsoft has been selling down, but not to the same degree. It's actually been rallying much more than Apple has been. With the hit to the main markets, we've seen Bitcoin retracing because Bitcoin cannot escape the stock market's gravity. We know that the alts cannot escape Bitcoin's gravity. If Bitcoin is coming down, what's Ethereum doing? You got it, it's coming down. What's Solana doing? It's coming down. What's BNB doing? It's coming down. XRP got hacked overnight. I'll get to that news in a minute. But what we saw, there was a lot of support down in this area. Structural support is there for that reason. It's the price in which things reverse. Structural resistance is exactly the same. If we have structural resistance, price will have a lot of problems getting across it. Structural support does the exact opposite. ADA is coming down with Bitcoin. What about AVAX? It's coming down as well. Doge is also coming down. It was a pretty bad day for Ripple chairman Chris Larsen. He was hacked for $112.5 million worth of XRP. Ouch. And thank you to AJ, who reached out and shared this hacker's journey of just hacking that XRP wallet and where it went to. So far, the stolen funds have been laundered through MEXC, Gate, Binance, Kraken, OKX, HTX, HIT, BTC, and others. Always the thing to bear in mind, no alt can escape Bitcoin's gravity. It also cannot escape structural support and structural resistance levels. One thing to keep in mind, Bitcoin scaling solutions are very important as the spot Bitcoin ETFs absorb billions of dollars. Bitcoin can be scaled in two ways. The blockchain can be upgraded to enable greater throughput, and additional networks called layers can be created to allow Bitcoin to be transferred without directly using the blockchain. The most prominent layer on top of Bitcoin's blockchain is the Lightning Network. Something else that you might like to keep your mind on is the number of new addresses inside Bitcoin. We often see as the number of new addresses takes a nosedive, so too does the price. There's quite good associations or directional correlations between the number of new addresses and the price of Bitcoin. A lot of people are curious on where Bitcoin could head in the next bull market. If we look back to the past bull market, the stock to flow model didn't quite make it. Bitcoin's price fell short, but there were so many black swans inside the market. We could see a very different market eventuate in this halving cycle. And if the stock to flow model is correct, we would expect Bitcoin's price around April 30th of 2025 to be over $1.2 million per Bitcoin. That is probably not going to happen. But you never know with Bitcoin. Bitcoin has been a bit of a powerhouse when it comes to returns. And with so much institutional interest, anything is possible. We're getting closer and closer to the halving, where there's a supply shock which causes the price to go up. But generally, miners capitulate, especially the weak, unprofitable miners, when this occurs. So just beware, it's not just a pre-drawn conclusion that it's just going to ramp up in value. And the halving is expected the 22nd of April 2024, in about 81 days. In other news, FTX plans to fully repay customers but not to restart the exchange. This has led to a sell-off in FTT. One of the things, a lot of people were talking about Jupiter. When a lot of people are talking about something, that's the sign that it's probably overheated and about to take a big dump. And we saw that 58% down so far. Typically, when you see a lot of hype, it means you've missed the entry. A good rule of thumb, you want to get things when it's quiet, and when it's heating up, you want to look to divest. From a trading perspective, but also have your investment strategy, some things are really worthwhile to have. When it comes to trading, if you look at really negative price action and you're leaning in at spot and buying, you'll find it's a very profitable thing to do. To sell those spikes, you can do incredibly well. Those little green arrows are areas where I bought at spot. The little red arrows are where I sold. And Litecoin did a heck of a job. It spiked through so much resistance, and then it got caught up with Bitcoin's gravity. Which raises a question, how am I dealing with XRP's variability right now? You can see I'm leaning in. XRP is a good project. It's always good to separate your accounts between investment accounts and trading accounts. This is all about trading. Let's just have a quick look at Ethereum. Ethereum had some really negative price action. There are times to accumulate. And you can see, depending on your annualized return on investment target, you can be turning over trades very, very effectively. What you'll find when you trade, you're going to get really good at timing the market, getting into the market and getting out of the market, getting in and out all the time. It's very, very profitable. What about something like Bitcoin? When we look at Bitcoin right now, we can see all of these accumulations and disposals. It's very profitable to go in and out of Bitcoin. You always want to get on the right side of the percentage, and you can buy on red even when the price is going up because you wait for retracements and you layer in there. And then you just sell the corresponding wave up. But how do you get prepared for the potential market movements that are coming? There are rules and laws that play out inside financial markets. You must know these laws. For example, what is the relationship between Bitcoin and crypto? What is the relationship between Bitcoin and the US 2-year yield? You must know these laws. If I invert Bitcoin, you can see it a little bit more clearly. There's an inverse relationship. If the US 2-year yield starts to spike up, and it may well, this is going to put negative price momentum on crypto. But don't forget, structure overrides everything. What about the relationship between Bitcoin and the US 10-year yield? Inverting Bitcoin, you can see it a little bit more clearly. There's an inverse relationship. If the US 10-year yield starts to rally on the basis of Jerome Powell's FOMC meeting, this would be expected to place negative price momentum on the major indices as well as crypto. What is the relationship between the DXY and Bitcoin? Inverting Bitcoin makes it a little easier to understand. You can see there's basically an inverse relationship, but it's not a perfect one. But that doesn't matter. You don't need perfection inside financial markets. You just need an edge. I always look at the Tier 1, the Tier 2, and the Tier 3 structural levels. Before I do any trade, I have a scientific process that I apply. For example, if I see the VIX going up, the DXY going up, the US 2-year, the US 10-year, that means negative momentum inside the main markets and also crypto. That means I prepare for the downside. To see if negative momentum is occurring, I look at the major players such as Apple and Microsoft. Of course, if any of the cryptos are weakening, that explains that Bitcoin and total crypto market cap could be weakening next. That also indicates weakness inside the main markets. If the yields are increasing, I know to look for gold to retrace, and gold and silver like to hang out together, so therefore silver should impact as well. You can see that it may look like all these are separate charts. They're not separate at all. They're intercorrelated and interconnected. And when you can read off the structural levels across these charts and know what you're doing, you can do incredibly well. If you would like the structural indicators across the Tier 1, Tier 2, and Tier 3 charts, just pop across to the ctksmethod.org. You can pick them up there. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.